Hi everyone, welcome back to another episode of Providend's Money Wisdom Podcast. I'm your host, Isaac, Associate Advisor at Providend. Join with me today is Zhi Han, who is a client advisor, and Joyce, who is an Associate Advisor here at Providend. Hi guys.
Hey,
Hello.
hi Isaac.
Hi, Isaac.
Thanks for taking the time to have a chat today.
Happy to be here.
Yeah, same.
Today's topic is the wealth advisory landscape of Singapore, and we have specifically chosen both of you to share your past experiences working within the wealth advisory space, of course prior to joining Providend. So before we begin, could you briefly share with our listeners about your experiences, in the wealth advisory space before you joined here? Let's start with Zhi Han. What did you do previously and what prompted you to join Providend?
Right. I actually started my career representing an insurer in 2009 before transiting to a financial advisory firm in 2019. So representing an FA firm is slightly different from representing an insurer because an FA firm actually allows us to recommend products from various insurance companies and different investment platforms. So how I really came about to Providend was actually because of a video. So one day I was just researching on some CPF schemes. I came across a video posted by Providend featuring Chris. So what he said really resonated with me, and hence I started following Providend. First of all, Providend's fee-only structure really appealed to me, and the support that an advisor gets also really appealed to me. Fee-only structure removes a huge chunk of the financial conflict of interest. And then in Providend, we also have an investment team, taking care of the investment side of things, solutions, taking care of the planning methodologies, insurance, etc. So, as advisors, we really cannot be an expert and cannot be multidisciplinary. And also having all this support and also the fee-only structure, I think that, was the pull factor for me to come to Providend.
Yeah, so Zhi Han, thanks for sharing. So which video specifically did you watch that that featured Chris and inspired you to apply for Providend?
There's a couple of videos, but the very first video was actually, I think it was on the Royal Singapore, whereby Chris shared his story about why he actually left the insurance industry because one day when he was approaching a very senior client and the senior client was always very supportive of him, and he actually asked Chris that Chris, you always come to me, I always support you, right? But I'm sure one day the insurance that I have will be enough, right? So, that made Chris really think about it. And he talked about the inherent conflict of interest between an advisor and a client. So, yeah, that was the first video that I saw that kickstarted me following Providend.
Actually, if you go onto our Providend YouTube homepage, the landing page, you actually can see that the story of Chris, the reason why he started Providend is on the page. Yeah.
Right.
Right, and a lot of our staff, especially advisors, they experience the same thing. Like they watch a video of Chris, they listen to a talk about that Providend has done, and that inspired them to write into us to join .
Exactly. I think it's really the philosophy that brings in the right-minded people.
Okay, thanks for sharing, Zhi Han. So, Joyce, what about you? How was your wealth advisory journey prior to joining Providend?
Thanks, Isaac, for the introduction. So prior to joining Providend, I was a financial consultant at a local bank. Then I soon realized that what truly motivated me was the opportunity to provide ethical financial advice to my clients and believe that financial literacy plays a vital role in everybody's life. So while I was in the midst of searching opportunities to fulfill my passion, I chanced upon a video by the Royal Singapore similar to Zhi Han. Yes, yeah. So how I get to know this video is because my partner watched this video and he was saying that I think you can relate to this guy. This guy means Chris. Yeah, so I watched the video and I was truly inspired by Chris and the founders at Providend, who stood their ground as the first fee-only wealth advisory in Singapore, changing the way wealth advice is given. So, despite facing the backlash from the industry, their commitment to being honest and providing genuine advice aligned perfectly with my values. And this prompted me to reach out to Providend and join their mission to make a positive impact in people's lives.
Okay, that's really interesting that both of you were inspired to join Providend after watching a video from Chris. So I think Chris accidentally created a very effective recruitment video. So to our listeners, whoever who is interested, you can actually go to our YouTube page to look for that video. And if you are interested in a career at Providend, maybe you can always write in to us, and we can always have a chat with you to see whether we align and there's a possibility for a career at Providend. Okay, so let's just jump right into today's topic. So let's start with the structure of your previous role in terms of pay or even the scope of work. So in terms of how your pay is structured, let's start with Zhi Han. How does it differ from a typical 9 to 5 job?
Right. I mean, a typical 9 to 5 job, for most employees, they are employed, they get a monthly salary. But for, I would say, almost all the financial advisors out there, we are all self-employed. So if you recall my introduction, I mentioned that I was representing an insurer, representing an FA firm, and not working for them. Right? So we are all self-employed. We are compensated via commission. So if let's say there isn't a sale, we will not have any income, and actually that can be quite daunting for someone new who has not joined the industry yet.
Well, so at the start it would be is quite tough because if you don't have any basic, and at the start you wouldn't have any clienteles, right?
Yeah, you can say that. However, right now there are quite a number of schemes out there to help people who wants to join the industry. It's like some sort of pay, but there's no free lunch in the world. If let's say you don't meet a certain target, you may have to pay back at a certain time.
I see. Okay.
Yeah. So we were just talking about having a commission. So the thing is that for the commissions, generally we are paid over a period of 6 years. Sometimes it can stretch longer. Sometimes it is shorter. So if let's say we are consistent with our sales, the recurring commissions can actually get pretty substantial over the years. And so for a seasoned agent who has been in the industry for quite some time, been a pretty consistent performer, even if let's say that month he or she does not bring in any sale, he or she can still fall back on the recurring commissions for an income. So in that sense, I think it's pretty stable, pretty lucrative for someone that does well.
Right, so if you have a base of clients already, so the recurring income would sort of be like that. Less pressure, always try to find sales every month once you have that base.
Yeah, you can say that. You can get comfortable after a certain number of years.
Right, then what is your daily duties like, when you are going to the office, for example? How is it like as compared to a typical 9 to 5 job?
Also, prospecting and client meetings, right, they are really the lifeline of every self-employed financial advisor. We actually spend a great deal of our time doing that, prospecting, meeting clients. So when we are not prospecting, what we will be doing is actually the mundane administrative stuff, doing product comparison, administrative work, studying the various financial products. And as self-employed, we do not have anyone to report to. So sometimes, we will just be really, really lazy and not do anything.
Right. Okay, what about you, Joyce? You worked in a bank before. How does it differ from a typical 9 to 5 job?
Okay, so when it comes to pay structure, right, a little bit similar to Zhi Han's, but different is in that working in a bank means you will receive a fixed salary, a higher fixed salary with commissions. So, however, compared to financial advisors, bankers usually earn lower commissions.
Right.
Yeah. To earn a higher commissions, you will need to meet your target. In order to meet your target, which often involves in promoting products that generate more revenue.
Okay.
Yeah. So in terms of our job scope, working in Providend is quite different from the bank. So I was posted at a bank branch. My daily routine involved assisting the walk-in clients, helping them with account opening, bank account openings, servicings, and more.
Right, so Joyce, you mentioned that it's different from how it is here at Providend. So could you elaborate on what the difference is like?
So in terms of the job scope, I'm an associate advisor here at Providend. So I'll be assisting our client advisors in the para planning work, and also we'll be attending the meetings with client advisors, and also helping with some administrative work. But mostly here at Providend, we do have trainings almost weekly about products or investment instruments that we consider, such as like crypto, private equities. So we actually have a training about the products, the instruments, not about how to sell it, but more of why we did not incorporate it in our portfolio. So knowledge can be trained, but whereas in the bank, the training that's provided are more of training of a product, of how to sell that products to clients. Okay, so this is mainly the job scope that's different. But I noticed that one key difference between working at Providend and the bank is the people. So here at Providend, we place great emphasis on the people that we hire. You can be a great salesman or an advisor with high assets under management, but if you don't have the heart to act on clients' best interests by doing the right thing, you cannot be one of us. So you simply cannot fit in. And the people here, regardless, during lunch break or coffee break, we often talk about how to do, talking about doing the right thing for client, and how we can better value add to our clients. Yeah, so the passion of providing proper and ethical advice here is what truly sets us apart, and is what makes us who we are.
Right. I can't agree more with what Joyce have just said. Client centricity is really at the core of what we do over here at Providend. So, in the past, I spent a lot of time prospecting, meeting clients. Right now, what I realize is that I spend almost all my time still meeting clients, but listening and understanding their needs, really helping them to uncover what really matters to them. And I spend a great deal of time, on analysis, numbers crunching, helping them craft their wealth management plan. And like what Joyce mentioned, we do spend a considerable time attending internal and external trainings. A very drastic difference that I really realized is the passion that the people of Providend has. When I first came, it was quite mind-blowing because something that wasn't experienced before. Right, we will spend 2-3 hours, the whole company, the solutions team, investment team, the AAs, the CAs, spend 3 hours debating on how we should structure the risk profile questionnaire. Something that unheard of in the industry.
Yeah.
Right. So I think client centricity, that's really the core of us.
Yeah, I think on to what Joyce mentioned also, we had 6 hours of crypto training. So we didn't intend to put cryptos in our portfolios, but we don't want to, if at the point in time, I think it was the height of the crypto hype, where everyone was asking about crypto and whether Providend is considering that. So the short answer is no, but the company feel that we should be educated about it. So we went through 6 hours of crypto training, understand how it works. It was very complicated. I tried to absorb as much as I could, but in general, that's we just don't want to just say, we don't want to do it and that's it. We want to educate ourselves and give a reason why we say, to give an educated reason on why we do not add crypto into our portfolios.
Right.
Okay, so let's move on to client acquisition. So with every sales role, client acquisition is crucial. So, Zhi Han, in terms of client acquisition in FA or IFA firm, how is it like for an advisor to get clients?
It all really depends on us. We are our own boss, so we dictate our prospecting activities. We really did everything. I mean, when I first started out, there wasn't any recurring income, so I had to do everything myself. So a typical day is that 9:30 I reach office, I cold call until 12:30, go for lunch, and after lunch continue cold calling. Then 5-6 o'clock go to the MRT station, do street canvassing. Then at night we would comb the HDB flats, and especially during weekends, 7 to 10. PM, that's the prime time when everybody is at home. So you'll see me scoring through all the HDB flats in Singapore. But when things got a little bit more stable, there's some recurring income. That's when we can start to do things at scale lah. We employ telemarketers, right? We set up a call center, things like that. But gradually, as the landscape changed, social media start to gain traction. We started Facebook advertising, and I started, LinkedIn advertising, all these things as well. So yeah, it really depends on us on how we want to conduct our client acquisition activities.
Wow, sounds like really hard work. I mean, is that something you do every day, or you allocate certain days of the week that you go around scouring all the HDB flats that you mentioned?
For the first 3 years, when we do not have a lot of clients and we do not have a huge recurring base, we really had to do that lah. But after 3 years, when I acquired about 200 clients, that's when things get more comfortable.
Yeah. So do you face a lot of rejections when you were doing all this, and how do you feel during when you face all these rejections? Do people find you annoying, or?
Initially it was difficult, but we were trained to accept rejection as part and parcel lah. I mean, if let's say when we are doing cold call, we don't even know who the other party is, right? So if let's say you want to scold us, it's just another voice, right? But things do get a little bit more personal when you meet face to face, like when you are doing road shows or you are combing the HDB flats, you get slammed and things like that. But after a while, it's just part and parcel of the process.
Right. Okay, Joyce, so how does it differ in the bank?
So similar to Zhi Han, I also do cold calling back then. And as I mentioned earlier, I have to assist the walk-in clients, right? So every time when you get a chance to speak to a walk-in client, that's when we will start with small talk, knowing them, asking them the purpose of opening an account. Is it for saving purpose? I think that's a general question that most of the bankers. So I think if you ever been to the branch to open an account, I think that's a question that you usually get from the bankers. But eventually, you'll find that actually financial planning is very important. The advice that we give as an advisor is very important. It could impact their lives and their future. So I started getting more interested in knowing how they plan their finances. That's where I started to look into study into insurances and all that, because before aside from savings, you also have to make sure that you do have sufficient coverage for yourself in terms of like insurance and all that, right? So that's when I studied deep into the needs.
Right. So before we go into the process, I'm actually very curious about what are the strategies that you use in the bank to get clients. I think for Zhi Han, he shared that he's really just going I guess door to door knocking, whereas in the bank, what are the strategies that personal bankers would use to acquire clients?
Good question. So I recall having I think most of you will have this account that we call it a salary crediting account,
right?
Which usually gives you a higher interest rate for whatever savings that you have. But this requires you to hit a certain criteria. Yep. So the most straightforward one is to have a salary gyro credit into your account. Then you have credit card spending, and also if you have an insurance product with the bank. Okay, so how we used to bundle that is that if you use your credit card to spend on your premiums, then you hit 2 criteria.
Okay.
And then you have salary crediting, then you hit 3 criteria, then you get a higher interest rate. So by doing this bundle, right, client will then get interested in, maybe I can, it's savings also. It's part of savings, right? I buy endowments, I pay the premiums using my credit card. It's a win-win situation. But really or not, there is a need for that. Or can you do better than just doing an endowment? This is another story.
Yeah, I can see how that is quite enticing.
Back then when I was an FA agent, our competitors are not really fellow colleagues, it's actually the bankers. Because first of all, they know exactly how much money the client has, they know exactly how much they are earning, they have full access to all the information, whereas we poor agents have to be left down there guessing.
Yeah, I mean, there's give and take, right? Like even earlier you mentioned and talk about the pay structure. The bankers will have a higher basic but less commission. But the FA, like you mentioned, you're self-employed, but you have to do a lot of client acquisition work yourself, lah. In a way, the bank has more weapons, right? Like you have this higher savings account, you have this promotion, probably a fixed deposit promotion as well that you can use, lah.
Exactly.
Okay, so let's move on to the advisory process. So let's say you both have an appointment with a client. So how does it typically go from the point of meeting the client for the first time and to the closing of the sale?
Yeah, usually it's the advisor that reach out to the prospect first, lah, right? In the FA insurance industry. So when the prospect agrees to meet up, they have something that they are looking for, or something that we have said, that we have mentioned in our initial conversation, that actually interests them. So when we meet, we will dive straight into the area, lor. Typically, it's just two areas of financial planning, like it's either wealth protection, or wealth accumulation. In insurance term, either a life policy or endowment plan. So we'll just go straight into the area. Pretty
Right.
straightforward.
So in terms of your own personal experience, like how many meetings, ideally, how many meetings do you hold before closing the deal?
Of course, we want to close the deal on the first meetup, lah, right? However, it's not entirely possible for all clients. Typically, two meetings before we close the deal.
Yeah, so it's very similar. The meeting is usually a follow-up meeting after account opening process, or a meeting that we arrange during the cold calling. Yeah, so we were expected to close the very first time when we meet the client, which usually takes up to 2 to 3 hours.
Right.
And that is very short, I would say.
So within this first meeting, let's say you close the client, there's a fact finding that has to be done, the risk profiling. Of course, there's a huge scope for wealth planning, right? Protection, accumulation, drawdown, or even wealth transfer, and all of these are interconnected. So, for example, if let's say you allocate more for wealth protection, like insurance, for example, you have less for wealth accumulation. So, how do you deal with this? If you have to close, or rather, you close a deal with the client within the first or second meeting.
Right. I mean, I can't say that, it is relevant to all financial advisors out there, but based on my personal experience, my take is that generally the population out there isn't ready to do comprehensive financial planning. So, like what I mentioned earlier on, they are usually more interested to do one area of financial planning. It can be they just want to save for their retirement, or they want to save for their children's education, or they want to be covered in terms of critical illness. So we'll just dive into that aspect of financial planning. It is really through relationship building. After the first sale has been made, the relationship has been built, trust has been built over time. That when they become more comfortable with you, then you can really dive deep into their finances and do a comprehensive financial plan for them. But other than that, the first couple of meetings usually is really just targeted at the area that they are interested in.
So very similar to what Zhi Han just mentioned. So we will do the proper fact finding. So after fact finding, knowing how much surplus cash flow that they have, then whether they have enough for savings, endowment plans, or do they have enough protection, then that's where we close the deal. They have already bought a lot of endowments back then. So naturally, buying another one is just
very
easy.
normal to them.
It's very normal to them.
Right. So in a way, it's very transactional in terms of, just do a fact find, we do risk profiling, and then we'll have a discussion on the affordability, and then the product is sold.
Generally, I would say so, but there are certain exceptions where clients are really more into comprehensive financial planning and they do not mind revealing more info about themselves. But you are right, generally it's pretty transactional.
I see. So let's move on to the financial instruments that is recommended to the clients. So what are the products or instruments that you typically recommend when you do after you've done the fact finding and risk profiling? What do you usually recommend to the clients?
So banks typically have limited products that to product providers that they have a partnership with, and the benefits is that if you purchase the product from the bank, you can just visit to any branch if you need some kind of servicing or you have any questions regarding the product. You can always go to any branch. For clients who are looking for something that's, I would say, less risky, products like endowment plans are being introduced. Yeah, short-term endowment, long-term for savings. So for clients who are looking for something riskier, who don't mind taking risks, there will be unit trusts from different fund houses.
Right. So how does it differ as a IFA agent, Zhi Han?
In the financial planning industry, there are two structures out there. One is a tied agency whereby you are tied to the insurer that you're representing. Another one is independent IFA, whereby you represent multiple insurance companies and various investment platforms as well. So with that structure in mind, you have access to basically all the financial solutions out there. For protection, you can have like CareShield Life, Elder Shield Supplement, whole life plans, term policies, ILPs, right? Whether it is for protection or wealth accumulation. And for wealth accumulation portion, the more conservative ones will go for endowment plans, retirement income plans, savings plans, and things like that. So we basically have access to almost everything. And for investments, it will be unit trusts, but typically actively managed funds.
Right. So to what extent did this wide range of instruments allow you to give good financial advice?
I think the access to so many different financial solutions did not really enable us to give better advice, because you can give better advice even without any products in place, right?
Right.
The only thing is that it gives us more solutions, more avenues to select a better product. However, the truth is that when we have access to 13 different insurers, and each insurance company has got 20, 30 products, do you think we are an expert in every single product? It's very unlikely, correct?
Yeah.
So the truth is that we are only masters of a couple of insurance companies and different products.
Right, that's a good point. Okay, let's move on to follow-up. So do you both regularly meet up with all your clients, like at least once a year?
Okay, so depends on the client's expectation. So most clients are used to the very transactional kind of relationship with the banker. So no matter how genuine you are, some clients rather not meet you because they don't need any help unless they need servicing in the products or they have questions regarding that investments, right? So, but I do have a group of clients that I'm close with and remain close with today. These clients are the clients that I meet up regularly a year. I would say maybe easily maybe once every 2-3 months.
I totally agree with Joyce. It's really not possible to meet up with every single client once a year as a financial advisor and operating as a one-man show, right? Like for me, back then I had about 500 clients, so logistically it's really not possible. If I just need to meet one client every single day, 1 year itself is not even enough. And mainly it's also because most of them are insurance clients. So, when they purchase endowment plan, term policy or life policy, there's not much review needed, right? So in that sense, operationally it's not viable, and in terms of needs, not exactly required as well. But for clients that has got investment plans with me, we do update them regularly. Sometimes they do call us as well. So another aspect is also probably is also the rapport with your clients. Sometimes you do meet up with them, for a meal to chit chat like a normal friend. Yeah, so it really depends.
So how do conversations usually go when you meet up with them?
So when I do meet up with them, we usually catch up on their personal matters, usually about their work, and sometimes even discuss about financial issues. So just for example, I have this client who in her early 60s. She often come to me asking, because she does have a lot of money in the bank accounts in various banks. So she usually will come to me and ask, hey, I'm being offered this product. Whether is this product sound for me? Because I'm in my 60s really. So these are the conversations that I have with my clients. If they really need help or they need a second opinion, they will always come to me.
Right, what about you, Zhi Han?
Contrary to what a lot of people actually believe, that every time when financial advisors meet up with clients, it's always about a product. Yeah, true to a certain extent, but not entirely true. Because for me, there are clients that I really enjoy hanging out with. We have meaningful conversations. So yeah, we can meet, and not talk about products, not talk about money, but talk about life in general, about being human, building relationships, right? But yes, we do meet up with clients with an agenda. Perhaps, there's a new launch, there's a certain product that we think that will benefit clients and we really want to recommend that product to them. We do meet up with them for various reasons.
I see. Thanks for sharing, both of you. Okay, so let's move on to Providend's process. So in terms of client acquisition, our advisory process, the financial instruments that we use, and the follow-up that we do, I believe we take a very different approach. So maybe Zhi Han, at a high level, could you explain our approach?
Right. I think over at Providend, we are very fortunate, because clients generally come to us, they write into us and inquire on what we can actually provide them with. So in terms of client acquisition, we don't really have to do anything. The brands team, they are in charge of communicating our philosophies, our planning methodologies, and I think they have done a really, really good job in that aspect. So when clients come to us, we actually hold very deep conversations with them, and that's important to us because we really believe in making life decisions first before making financial decisions, right? That's the number one call. And because of this philosophy, it's important for us to know what is important for our clients. And it's through deep questioning techniques that we are able to identify and uncover what really matters most to our clients. And once we can actually uncover that, it's the easier part of using suitable instruments, numbers crunching analysis, and try to write a plan that fits their life aspirations. So in terms of the instruments that we use, low cost is very important for us in terms of risk mitigation. The insurance policies that we recommend, for example, we seldom recommend a whole life policy because of the cost, right? Term policy is what we advocate. And in terms of investing, we do not believe in forecasting. We do not believe in timing the market or having any strategic or tactical asset allocation. Low cost is very important also in terms of fees, because we also believe that while we can get the returns that the market generate, if we do not keep the cost, the fees under check, it will eat into the returns in the long run. So that's basically what we do in terms of planning and analyzing for our clients. And of course, that's actually the start of a financial wealth management plan, because financial planning, wealth management is really for the long run, for whole of life, right? So we conduct regular updates with our clients, progress meetings. If let's say there's any tweaks that is needed, we have to make changes to the plan, make adjustments. Yeah, so basically that's really what we do over at Providend.
Just to add on, right? So all the process that Zhi Han just mentioned, it takes 2 to 3 months. So it's very different from the bank. So we are expected to close a deal within a few hours or within the first 2 meetings, right? With us, we think that the first meeting, the second meeting are the very important meetings. The analysis part will take longer than usual. Giving solutions is easy, but really finding the problem is the difficult part. The diagnosis, we say.
Right, so the first few meetings, there is no transactions involved.
It's really uncovering what's important and also setting the alignment in terms of the client and the firm, the advisor. Because you see, wealth management, like what I mentioned, is really a lifelong journey. So before you engage in this professional relationship, you want to have and make sure that the alignment is there.
So how does fee only come into play? In this case, how does fee only, this structure of being a fee only wealth advisory allow us to use this approach?
So when we talk about fee only, it means that clients pay us a fee to do the financial planning, the wealth management work for them. So when they pay us a fee, we are actually on our client side with no financial conflict of interest, right? So with that in mind, we can actually very impartially write a report that is based on their best interests. And with that, when we do not have any financial incentive to recommend them a certain products, that also gives us the fiduciary duty to recommend products which has the client's interest at best.
So for listeners who are not familiar, could you elaborate more on the fee-only structure?
Okay, fee only means that client pay us a fee to help them with their wealth management needs. So we do the analysis, right? We do the numbers crunching, and we come up with the recommendations, and we also recommend them solutions. A very crucial thing about fee only is that only the client pay us a fee. We do not accept any form of commissions from any providers out there, and hence with this business structure, it actually eradicates the inherent conflict of interest between the client and the firm. However, I think there's an article that our CEO Christopher Tan mentioned about being fee only does not mean that there's entirely no conflict of interest. But how do we actually mitigate this conflict of interest? It's through the writing of a wealth management report. Our clients that come to us, they are really not silly. If let's say we recommend something which is out of the ordinary, that is not relevant, they will be able to tell. So fee only is the first way we mitigate the financial conflict of interest between the client and the firm. And the second way is through the writing of a comprehensive wealth management report.
Just to add on that being fee only is not just that we don't take any commissions, but it also means that any of the investment instruments do pay us a trailer fees. We will refund them back to our client, but generally we utilize funds that do not pay us any trailer fee.
Right, so to summarize, if let's say a client buys an insurance, we will only choose what is best for them regardless of what is the commission that is being paid out from the insurer. So the same will apply for different funds as well in different fund houses. It shouldn't influence our decision whether we choose Fund A or Fund B, and rather that's how we are able to choose the best instrument for our clients, because they are our only paymaster.
Right, that very accurately summarizes the benefit of being fee only.
Okay, let's move on to the last question. It's a bit cheeky, in terms of this question, but just try your best to answer it, okay? So let's say you are granted the authority to make a change in terms of our wealth advisory landscape. What is the one thing you will change about our current landscape?
I don't think I want to change anything about it, but what I really feel is critical is that the general public really needs to educate themselves in terms of their financial literacy. Because when we have the knowledge, we will be able to tell whether or not the advice that is given by the financial advisor, is it a real advice, a genuine advice, or it is merely product pushing. So yeah, with that change in terms of educating our general public, I think that will really, really change how the financial advisory industry will function.
Right, so what about you, Joyce?
I totally agree with what Zhi Han said. I think that financial literacy is very important. So prior to joining Providend, I actually exploring providing financial literacy for the younger adults or kids, because being well educated in financial literacy will help to prevent you from buying products that is not suitable for you.
At Providend, that's what we are an advocate for as well. I mean, we produce a lot of content, articles, or even this podcast to really promote financial literacy in Singapore. And we hope that, as this podcast grows, as our listener base grows, they will have more knowledge and which allows them to avoid financial pitfalls. That's all for this week's episode. Thanks Zhi Han and Joyce for both your time today.
Thank you.
Thanks for having us.
Yep, so to all our listeners, I hope you enjoyed our episode on wealth planning landscape in Singapore. If you like this episode, follow our podcast and follow us on social media for similar contents. As always, thank you for listening, and I'll see you in the next episode. All analysis, views or opinions from interviews, recommendations and other information broadcasted, podcasted or published herein are provided for general information purposes only. Information expressed does not take into account any specific situation, particular needs or objectives and should not be construed as specific advice or a recommendation. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal or tax professional before taking any action. Providend Limited does not accept any liability for any loss whatsoever arising from any use of the information broadcasted, podcasted or published herein. All contents and information contained herein may not be copied or reproduced in whole or in part by any means without prior written consent of Providend Limited.